everyone. I hope you are all keeping safe. So we're going to start as usual by talking about the key movers that affected the market in the past couple of days, and then go over some of the major economic events or economic indicators to be released this week, and then highlight some of the top forming patterns on the MetaTrader 4 platform. I'm just making sure the sound is good. Okay, perfect. So first, let's going to start with the key movers. Still COVID-19, all the implications, all the headlines, they're still affecting the market, whether positively or negatively. So now when we're just hearing about more vaccination, whether in the United Kingdom or in the United States, there's a bit more optimism in the market. We're seeing the numbers are going down to pre-New Year level, which is also a bit optimistic. And this is just reflecting some positive sentiment in the market. We're seeing stock indices are rallying, safe havens are being dumped, and riskier currencies are being bought mainly. So this is for COVID. ECB Lagarde speech last week. So mainly all central bankers, they're just talking about or focusing about how to take the economy back on the right track, how to recover or support the labor market in recovering, especially in the United States, while just looking forward for any rises in inflation. However, they still believe that it's a bit far to go for inflationary mode. This was shared between the European Central Bank Christine Lagarde, the European Central Bank President Christine Lagarde, and the Federal Reserve Chairman Jerome Powell, where he insisted that the labor market is weak and it needs time to recover, and the Federal Reserve will focus on the mandate of dropping the unemployment rate or lowering the employment rate, the unemployment rate, rather than going after inflation. And this is just gave us a new sentiment in the market, which just also expressed that the Federal Reserve will be continuing its asset purchases program for a while, as long as there is weakness in the labor market. So also the U.S. fiscal stimulus is still going on, the negotiations about it. There are still some issues about who will be granted these direct payments, the $1,400. Still maybe later this month or earlier in March we'll have more clarity about the new fiscal stimulus bill, which could be around $1.9 trillion. Everyone is just looking forward for the impact of this stimulus. Many investors are just afraid of a spike in inflation due to this huge supply in money, and this is what we need to assess when it comes to play. Also, Draghi, it is what's happening in Italy is just lowering the risks in the Eurozone. We heard previously about the debt problems in Italy and stuff. However, when now the ex-European Central Bank President, Mr. Mario Draghi, who supported the European Union, the Eurozone, and avoided the break in 2012 and supported the euro, has just accepted his role as the Prime Minister of Italy, and this could just add some more positivity and a little bit of strong risk sentiment in the euro region. This is just one of the factors that could be downing for the euro as a whole. It's just being receded. So this is all about the key movers that have highlighted the market or affected the markets in the past couple of days. Now we're going to go to the economic calendar to highlight the top economic releases this week. So first, let's start with tomorrow, Tuesday. We start early with from Australia with the Reserve Bank of Australia meeting minutes. Just to note, in the last meeting, the Reserve Bank of Australia just added or renewed the asset purchases program. They're still supporting the economy to recover fully from COVID, though the Australian economy was almost among the least impacted by the COVID outbreak. Also from the Eurozone, we have the German ZEW economic sentiment, which is expected to tick slightly lower to its 59.5 from 61.8. Slightly changed. This is not just so negative for the sentiment. It's just almost steady. We can consider it steady. Also, the second reading of the fourth quarter GDP from the Eurozone, which is expected to show a contraction of 0.7% in the fourth quarter of 2020. Any surprises to the upside, this could just play a good role in supporting risk sentiment. On Wednesday, it's a bit busy with the CPI, Consumer Price Index from the United Kingdom. The year-on-year reading is expected to show an increase by 0.5%. Moving to the United States, producer price index month-to-month expected to show an increase by 0.4%. Retail sales in January to show expansion by 1% versus contraction of 0.7% back in December. Industrial production also to rise by 0.4%. However, business inventories are expected to also rise by 0.5% in December. So this is just confirming the impact of COVID that took place in December on the US economy. As long as business inventories are increasing, this is just not healthy for the economy. Also, we have the FOMC meeting minutes. It's just one of the top economic events this week that you have to monitor. And we end the day with the API weekly crude oil stock. Moving to Thursday, we start early from Australia with the jobs report. Employment change expected to show additional 40,000 jobs created in January. Unemployment rate dropping to 6.5 from 6.6. The European Central Bank will be publishing the monetary policy meeting minutes. Weekly initial jobless claims to rise by only 775,000. Housing starts and building permits to show a slight drop, 1.655 million for housing starts and building permits 1.680. We just like to note that in the past month, the housing sector was booming in the United States, and this was obvious with the numbers. Moving to Philly Fed manufacturing index expected to show a decline towards 20 from 26.5. And we end the day with the crude oil inventories by US Energy Information Administration. Recently, the inventories in the United States were dropping, which is a good signal for oil prices. On Friday, also it's busy. We start with retail sales from the United Kingdom to show contraction of 1.6% in January. This goes to the lockdowns that took place. Also, we start with the preliminary reading of the February services and manufacturing PMI from the Eurozone, United Kingdom, and the United States. Most of them, they're just expecting, for example, the services PMI from the Eurozone is expected to tick slightly higher towards 46 from 45.5. While manufacturing PMI to drop to 54.4 from 54.8. In the United Kingdom, it's a bit different, much more appreciation in the services PMI to 42.3, but remains weak relative to Eurozone, with manufacturing PMI dropping to 53.1 from 54.1. Canadian retail sales to show a contraction by 2.6% in December, huge contraction relative to 1.3% change in November. Services and manufacturing PMI from the United States also to show a drop from previous figures, and existing home sales to come in at 6.6 million. These are the top economic indicators to come out this week. Now we're going to go to the MetaTrader 4 platform to just highlight some of the top patterns that are being formed recently. I'm just going to erase all the previously drawn elements of the chart. As usual, we're going to start with the euro dollar. We're going to go to the weekly chart, and you can see how the market last week rebounded, raising all the negativity that was taking place previously, and this is just an encouraging signal. You can just highlight the previous bottom, which is almost the previous top, so you can just highlight this one 1960 as a key level. It's still holding. There is a channel that is still holding. You can just draw these trend lines combining these channels, and you can see how the market is still respecting these levels. So watch out for any possible reversal here, where we could be trading inside this range for a while between 119.60 and 120.160. However, any pullback or any push to the upside breaking above 122 could just turn bullish again for the euro dollar. We need definitely a break above 121.80. A close above 121.80, 122.20 could just turn bullish again, and maybe could drive us higher towards 123.45 during the coming weeks. So this is the possible range that we're currently trading in for the euro dollar. Dips back below the 100-day exponential moving average were bought recently, so you can see 1 and 2 times. However, from here the market can go either ways. You can see this consolidation, the sideways move. If you move to the hourly chart, it's just clearer. This sideways trading gear, sideways behavior, awaiting some fresh fundamental drivers. The British pound against the United States dollar, if we go to the daily chart, you can see how the market is rallying to the upside, breaking above 139 today, which is the highest since early 2019, and this is just bullish again for the British pound. Where we could be looking at is the 140 psychological level. It's one of the key levels to watch out for. On the bigger picture, also we have this trend line, it's still holding for the British pound against the United States dollar. So as long as we're above it, we're just tackling further highs. If we want to go deeper to the recent price action, you can just highlight the previous top of 137.75, which was previously a key level, and then the market retraced exactly towards almost this point and then bounced higher. So as long as we're above the interim support support of 38.60, the market could continue towards 1.4. Moving back below 38.60 could just trigger another sell-off or another correction towards 37.50 level, and then towards the 200-day exponential moving average, which acted as key support previously. The US dollar against the Japanese yen, finally this pair just witnessed a little bit of a movement after being in a certain consolidation for a while. So we had this clear break out of the zone. So you can just highlight it by this trend line, and it was really clear how the market was able to break to the upside. Then we had this retracement, and then the market is moving higher again. So definitely, in order to just continue to the upside, we need to move back above 105.80. There are still some chatters about the strength of the yen that was taking place during the past couple of months. So this could just be on the table for a while. So moving back above 106 is just bullish again, and we could be heading again towards 107 level and even 108.10. While moving back below the previous bottom and the trend line, so breaking back below this trend line and this previous resistance, which turned into support near 104.40, could just be bearish again for the pair. So if we just go for the H4 chart on a closer look, if we just remove this trend line and just trade with the market as support and resistance, you can see how the market is just holding here at 104.40. And move back below 104.40 could just turn bearish again for the dollar against the Japanese yen. The US dollar against the Swiss franc, we have this inverted head and shoulder formation, and the market rallied to the upside to exactly this. So if you just draw this trend line combining these previous tops, you can see how the market exactly rallied to this trend line. So now currently we're stuck almost back near the neckline. So you can just draw here almost an area between 89.30 and 88.80. We're currently trading in between. So failure to move back to the upside towards the trend line here could just be more bearish for the pair, and we could be dropping again towards 88.15 and even lower. While a move here and the break back above 89.40 could just turn bullish again, and we could be retesting the 90 psychological level. The Australian dollar against the United States dollar is among the top performers. We can see this rebound that took place recently and the rally from 75.50 almost to 77.70, almost 220 points. So the target could be the previous top of 78.18. However, we definitely need to continue trading above 77, since if any dip back below 77 could just turn bearish again, and we could be paying a visit again towards 75, 70 level almost. So these are the key levels if you are trading the Australian dollar against the United States dollar. Also, I would like to note this trend line that's currently holding for the Australian dollar. So you can draw just this trend line by combining the previous bottoms. As long as we're above it, we could just chasing further highs. However, watch out for a double top formation here and a break below the trend line where we could be visiting again 75.70. The New Zealand dollar against the United States dollar, almost similar formation. You can see how the market is moving sideways recently, failing to break above 72.50 area. However, any break above it could just lead to further appreciation towards 73.40, 73.15, the previous top, and then 73.40. However, you can see also here the higher lows for this trend line combining these previous lows. Watch out for any break back below it because it could lead to a bigger correction towards the 70 psychological level, and then ahead of it 71, which was recently a key support. The US dollar against Canadian dollar, we're still trading inside this this range. So if you just go to the weekly chart, you can see how the market rebounded exactly previously to the trend line combining these previous tops. So you can see this valid formation here. I'm just going to start with the bigger picture and then go smaller. So this is the weekly chart. If you go to the daily chart here, it's more accurate. So watch out for a possible retest of this bottom. So you can just draw a channel here combining these tops and bottoms, where we could be moving forward next. So watch out for this possible formation of a channel, a dip here to the bottom of the previous trend line near 125, and then moving back higher and breaking above above this falling down trend line from the top of almost 146. So this just remains a key area for traders. Moving above this trend line is just crucial, and this could lead to a reversal in the current trend witnessing. Also, you can just add this area here as key resistance 129.55, which was previously key support, turned into key resistance. So breaking above the trend line, above the moving averages, and above 29.55 could just be bullish for the pair. As long as we're below it, we're just trading lower. If we just want to focus on the recent price action, definitely as long as we're above 27.40, we could be looking to further downsides near previous bottom of 25.70. Gold prices still, if you go to the weekly picture, avoiding the spill that took place earlier this year, you can see how the market is still trading inside this channel to the downside. As long as we're failing to break above 1875 and closing above 1875, the market could be looking for further downside, as long also as US yields are urging to the upside. So these are the possible clear levels for gold. Clearing back above 1875 could just add the chances of rising towards 1960 again. As long as we're below 1875, the market could just continue weaker below 1800 again. Also, you can see here on the hourly chart how the market recently is almost trading sideways. So indecisive moves on the hourly chart, you can see how the market is almost trading sideways inside the same, it's slightly similarly the same range. So if you just ignore this previous spill, you can see how the market is trading sideways between 1810 and 1875. Silver price is almost similar formation. So following this spike that took place on Wall Street bets trades, the market went back to normal levels and we were trading sideways. So you can just highlight these rising bottoms. You can just highlight move here. You can see these trend lines that are being built. As long as we're above them, we could be retesting $29 or $30 per ounce. Again, if we were able to break below these trend lines, the market could go for a correction towards 25.60. WTI, you can see the recent rally in oil prices is just unstoppable. The market is moving to the upside. We're just getting closer to previous key tops, so you can just highlight these previous tops where the market could be heading towards 63.60, and also you can highlight this trend line where the market broke above it. You can just go to the daily chart for a better look. So following this sideways formation here, the market went to this upside rally where we're almost trading inside this channel here to the upside. So you can see this price channel, how the market is trading in it. We can be moving higher towards the top of the channel ahead of a correction back towards $55.60 on crude oil, where the upper target could be just another push higher towards 62 and even 64.30 ahead of a correction. Moving to the Dow Jones. So on the bigger picture, if we just go back to what happened, what started back in May, you can see how the market is still trading inside this upward channel, and this could just trigger additional move to the upside, where if you just use the Fibonacci extension, you can see that the top of the market could be heading towards the top of the channel somewhere near almost 32,300. Could be the possible target, which is almost 161.8 tradesmen. So as long as we're above, we want to go deeper to the chart. So you can see how this sideways move recently was showing some indecision in the market, but there is some volume being built. So moving back below 31,200 is just bearish, and we could be falling again for another correction. As long as we're above it, we could be heading towards 32,350 on the short run, and this could be just supported by further fiscal stimulus. While the failure here and the reversal and the moving back below 31,200 or a close back below 31,200 could just lead to a bigger correction. First level, again, 30,600, and then towards 29,800, 29,600. This is all for today's session. If you have any questions, please write them down. I'd just like to remind you that all the information, use, analysis, and opinions mentioned in this session, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. Perfect. I believe this is it for today. Thank you all for joining and wish you a safe trading week.